But let's just focus in on some earnings. Britannia Industries, and it's been a fairly encouraging quarter, so to speak. The volumes at about 12%. Consolidated profit growth came in at a good 208 crore rupees, while there was a one-time loss of about 10 crores. Healthy margins, so no complaints there, 14.5% versus 10.9%. Let's get in then. Varun Berry, Managing Director, Britannia Industries. Thanks for joining in, Mr. Berry. I want to start off by understanding what has been the contributor to that 10% growth on your top line, and how much would be on account of volume growth and how much on account of price hikes?
So, as I was saying some time ago, our volume growth this quarter has been higher than our revenue growth. So volume growth on a consolidated basis is 11%, while the revenue growth is 10%. So it's more than 100% driven by volume growth.
Ms. Berry, good morning. Give us a sense of how the power brands did this time around, and what's been the response and the volume growth in the relaunched Good Day?
So Good Day is obviously our biggest brand and a very, very strong brand. It has been doing well, but after the relaunch, it's been doing even better. We are very delighted with the performance of Good Day. And it's doing well across the region, across its portfolio of variants, and I think we've really got what we wanted from the relaunch.
And how have your power brands performed this time around?
So all our power brands are doing well. Tiger is one brand that we've relaunched. Tiger was one brand which wasn't doing as well as we would have liked it to. But now with our inroads into the Hindi belt and the relaunch of Tiger brands, we think that that's going to be a lethal combination.
And, encouragingly, the input costs for the company have been quite benign. How much has it really aided the margins?
So input costs, as we speak, have started to go up. On 45% of the commodities that we buy, the input costs are now creeping up. It's flour, sugar, and cashew. The three commodities which have started to creep up. Oil prices are still low, but these three commodity prices have started to creep up. However, for the first 9 months of the quarter, we've had about 200 to 250 basis points of advantage because of the input costs.
Now, your cost savings as well have been very key to your margin growth. So what initiatives have you taken in that regard? And do you think that this kind of a trend is likely to continue?
Yeah, so productivity is a very core pillar of what we do at Britannia. It's very critical for us to continuously find productivity of 1.5% to 2% of our revenue every year. And what we look at is from end to end. A big part of that is the supply chain. Some of the projects that we've done are in the area of energy conservation, market returns that we get, making sure that our products are fresher so that we don't have expiries and we don't get returns, making sure that our products don't break. So all of those, and that's giving us pretty good returns. We've also looked at a long-term capacity plan, which gives us advantages on the distance traveled by the biscuits, which obviously is a cost, and also freshness of the biscuit, which also depends on the distance traveled by the biscuit to the end market. And we've just commissioned a plant in Tamil Nadu in Perundurai. We are about to commission a plant in Bangalore. And as we speak, we are looking at 3 more plants coming up in the next 1 year or so.
All right. So, Mr. Berry, then what is the average margin that you're targeting to clock in annually?
We don't give any future forecasts, but you've seen the margins that we've done in the last 2 quarters, which are pretty phenomenal. And it's not just the last 2 quarters. What I really want to highlight is the consistency of our performance. It's actually been the last 12 quarters where we've been growing top line as well as margins, over the last 12 quarters. Obviously, these 2 quarters we've been aided by commodity costs, but not before that. we are hoping that we'll be able to, continue our trends as we go forward.
And how are you managing to stay ahead of competition? Because there's so many names now in this segment. So what's the differentiating factor for Britannia?
So, it's important for us to focus on our own agenda. We do track competition, but we've been concentrating pretty much on our building blocks. One big part of the building block was distribution. We had a big gap versus our biggest competitor, and we were looking at plugging that gap through the most cost-effective distribution means. The second was simplification of our business. And in the process, we've reduced something like 140 SKUs to make sure that we get a business fairly simplified. Similarly, the 5 mega brand strategy was to make sure that we focus our money on the 5 mega brands rather than frittering them on the smaller brands. So those are the initiatives which are giving us an edge over competition, and our market share is moving in the right direction. And we hope that we continue to do that.
Right. And Mr. Berry, what are the new categories that you're planning to enter? And what's the plan for the dairy segment? How's that shaping up?
Well, the categories, the latest from our portfolio is really a product called Pure Magic Dews, which is being test marketed in Bangalore. This is the product. It's a very interesting product. It's a chocolate slab on a biscuit. And frankly, it's a bridge product between biscuits and chocolates. And I'd said some time back that we will be looking at bridge products to source business from other macro snacking categories. So this is obviously our first move into that. Our dairy evaluation is continuing very well. We do think that we should be ready in the next 2 to 3 months with a very solid strategy on that. And hopefully we'll be able to share it with you in the next quarterly results.
Okay, let you go on that note. Thank you so much, Mr. Berry, for giving us deeper insight as to how Q3 has been for Britannia. Margins aided by commodity costs, talking about some plants that they are looking to commission over the next 1 year, 3 in total, and benign input costs clearly has been the key growth driver. The stock is tempered off quite a bit from the day's high. Can't blame it, given the kind of market conditions we're seeing. 27.98 on Britannia, but all in all, it's been a good quarter. Let's move right on to another set of earnings. And Magma FinCorp reported a 20% rise almost in its net profit for Q3. We spoke with